Hi, Warriors. Hope everyone got through the Fed without being shred. Did. Hi, Steve.
I'm
Rand,
laughing.
how are you,
I'm
Mike?
laughing. I'm laughing inside.
Everyone doing okay? Hold on a sec.
Dale, can you hear me?
Got you.
Dale, can you hear me?
Yeah, I got you.
Oh, okay. Oh, I was just saying I'm laughing. I thought that was funny.
Oh, okay. Do you think, well, who was right? What was it?
Well, no, well, that's a good question. I'm going to say the market was not right. And there was something really interesting that I want to point this out because we were talking a lot about this, and then I'll let you go on and talk about
Yeah,
everything else you want to talk about. But this is a point that we made yesterday afternoon after the FOMC in the Forex Analytics chat room. The market was looking for a hawkish cut, right?
right. Yeah,
If you looked at if you look at Forex Analytics and you look at the market information and the orders and options that Ryan puts out every day, what he does every day at the end of the day is he's like, okay, this is where the biggest options are expiring today,
good to know.
which is, well, yeah, which was Thursday. Guess guess where all the options were expiring today, for the
One,
euro.
117.
Actually 116. So you
Oh, okay.
see, there was like, not only were there a lot of options, there was like $6 billion worth of options, six
Wow.
billion
It's a,
expiring at 116. So if you think about that, just think about that for a second. The market was pricing in a hawkish cut, meaning, hey, the Fed was going to be hawkish, the dollar was going to strengthen, the euro was going to drop to 116, and we're going to make a shit ton of money, right? Like
yeah,
all these option players are like, the euro is going to slump to 116, we're going to crush it. So when you got the dovish spin, which we'll talk about the FOMC here in a minute, and I'm sure you guys want to hear our take on this. And Ryan's he's on a podcast, so he's on the Wolf podcast right now. He's going to join us here in a few minutes. We'll talk about the FOMC and what was more
yeah.
dovish.
So the
But
option writers just collected all their premium,
oh
and
yeah,
those
and
guys are
and
fried.
everybody who bought those puts or those
Yeah.
options, that they were scrambling to cover yesterday, and so that's what shot the euro. That's part of it. Obviously, the
Okay.
dovish commentary too. So the market was poorly positioned for
Yeah.
yesterday's outcome. Is basically what it
Okay.
came down to.
We're approaching that 98 level now, Blake. So I've been talking about, a week or so ago, we did, most of F.A.C.E was talking about, what levels around 98. You have something 97.60. And I think Jim Welch was looking for a pullback to 98. So here we are, pretty close to it. My observation today was, I shorted some Aussie yesterday and I had stops over the high of the move. Okay, I thought for sure, if the dollar was going to go towards 98, I'd get taken out, but it never took out this high by about 20 pips. And I look at it today and I was thinking about, do I want to add to any dollar positions? And, I looked at cable and, it's diverging, but it's also a breakout. And, this euro has too much momentum. And then you look at something like Aussie, which is a change of tone because it's been outperforming the other ones for a while. So far, you just have a potential failing rally in Aussie. I don't think it really goes down a ton until if the dollar turns, but 98.15 is a level that I'm looking at. So we'll see. I think that the Aussie is showing a different characteristic than the rest of them. And also Canada, this might be drive two down here, but I think that's going to be setting up a low. and they just can't kill mechs anymore, Blake. Have you noticed that? I mean, we go to new lows and it has, they can't make any progress. This low, the RSI stayed above 30. It was really almost 40. So
Yeah, it's very
something's setting up.
divergent.
Yeah, something's setting up here. I don't know, when the trigger is, but I wouldn't be pressing the short side of US. I wouldn't short this thing anymore. Um, that's kind of what I'm seeing today.
Well, so I hear you. I hear what you're saying, Dale. Here's the counter argument to everything that you're saying. Because I see
Yeah,
the same
that's
thing,
it.
and I'm like, I shorted the dollar max at 1825 earlier this week. It
Yeah,
went to 1830, right? You see a
yeah,
fail right by your mouse.
yeah,
Failed at 1830, slumped back to 1822 and 1820, and I got out for a very nominal gain, like basically
yeah,
break even plus a little bit. Thankfully I held it for a day, maybe got a little bit of carry. Doesn't really matter. It's basically break even. It is just as frustrating to be a buyer as it is to be a seller, believe me.
yeah,
The problem that we have right now is that we are at the end of the year. There is a risk right now that Ryan knows this, and Ryan just joined us. The Fed's doing full on QE. I'm joking, Ryan. I just wanted to press your
Don't
buttons today.
start.
I
Don't
just wanted to
start.
press your buttons today. I mean, the Fed's going to be buying some bills to rebuild their balance sheet or whatever. They're calling it. That's all they're saying. But they are providing liquidity when there's more, you know, shit coming to the market, basically. So you can
yeah,
call it whatever you want, but they are quote unquote rebuilding their balance sheet. Whatever it is, they're providing a little bit more liquidity, whether it's QE light or it's not QE or whatever you want to call it. The dollar is probably going to remain under pressure. And the issue that I have, Dale, and circling back to this, is that now we're getting into the end of the year where
yeah.
people don't want to stand in front of it.
Anything
Yeah, and you look at the dollar index. You were just talking about. I've got a bear flag pattern on the dollar index. You can draw it
right
out. It's real
here.
simple. Yeah, that's the
Yeah,
flag,
this.
right?
Yeah, yeah.
It actually goes. It goes to It goes sub 98 to like 97.70.
Oh,
So
okay.
why would you want to stand in front of that? Like if you're a dollar bull and there's
No,
not a lot of liquidity, it's like,
you wait for your
yeah,
level.
you wait. Yeah, exactly. Like I can't tell you how many times that me as a trader, I've sat here and I've done it thousands upon thousands of times, where I sit here and go, you know what? I want to buy something when it gets here, and before it gets there, I start buying anyway because I get impatient.
Yeah, I've
And
done. Yeah,
yeah, it's like okay, that you want to buy the dollar when it gets to 97.83 because it is the 618 retracement, and then the flag's going to complete down there. So
yeah.
why don't you just wait until after the first of the year once we get down there and
Right.
and then go long? That's I struggle with it just like any other trader. That's why I said thousands upon thousands of times, because as a trader of 30 years, I still struggle with these issues. I wish that, you know, it was as easy as saying, okay, that's a rule, never break it, and then you'll never do it again. But that's not reality because we're all human,
That's right.
period.
We all have our default programs that,
Yes.
when we're changing our paradigm, at times we revert to the old form. So, yeah, one other feature that I think really stood out like a sore thumb, that with everything railing yesterday, um, the fact that Bitcoin closed lower on the day. I mean,
Well,
that was
that was a
really,
big issue, Dale. And last night,
look at
I think
that.
that's what took down risk in Asia. You should have saw. I don't know if you were watching. I was watching because I have obviously big positions on right now. When the S&P was falling, Bitcoin was falling, Ethereum was falling, and the S&Ps went into like free fall in Asia, and the
Yeah,
dollar finally caught a bid there at the very end. And I'm like, geez, man. I mean, it is really underperforming. If you own Bitcoin and you own Ethereum and they haven't gone up based on what happened yesterday, you've got to be
Yeah,
shitting your pants right now, wouldn't you
yeah.
think?
Yeah, I mean, that was a bad signal. Couldn't do anything with everything rocketing, metals, dollar weakening, rates coming down, perfect risk-on environment, and then a risk-on investment isn't performing. That's a real, market tell.
I think the writing's on the wall that Bitcoin's going to retest that 75,000 level. But
Yeah,
we
yeah,
could realistically, again, let's go back to the time in our calendar. It's at the end of the year. Let's say stocks continue to rock and we get to, 6950 all-time highs, then
yeah,
we go to 7,000. I mean, Bitcoin could get literally dragged back up to 100,000, but I will say that the price action looks like shit. If you own
yeah,
Bitcoin or crypto, the price action is really really scary for bulls right now.
yeah. So Ryan's here. How are you,
Yeah.
bro?
Hey,
Nice
how you
call.
going?
Hey, nice call on the Fed.
Oh, thank you, mate. I didn't actually manage to trade it in the end.
I think you were right. It wasn't a hawkish cut, was it?
Not if you look at what the dollar's doing today and what yields are
Yeah.
doing, then no.
Okay. So you said, did you ride this out, put on more yen shorts here, bro?
No, you know what? I didn't actually do anything over the Fed. It all got a bit choppy as the lines were coming out, as Powell was speaking. It was up, it was down. It wasn't as clean as the October FOMC. You know, when I said this wasn't dovish and the dollar shot up. So yeah, it really wasn't a clean sort of trade. So I didn't do anything, and I nearly hit dollar yen this morning, but December it's not looking too good, and so I'm think I'm more into position reduction than getting into anything new. But
Okay. It's that
Blake made
time of
a point.
year. What the hell?
Yeah,
You could, what's wrong with letting go for a week or so into the end of the year?
yeah, that's
You
not to
know?
say don't trade. And Blake got it spot on, and this was something I said on the Flow Show this morning as well. You know, if you're gonna jump in, if you want to fade the dollar, pick your levels. You've got to be very much more stricter on your levels. Don't trade those half levels. Yeah, these ones might work. You know, score your levels and think, right, I've got 5 levels here. I'm going to trade 2 of them. 2 of those I think are big levels, or they tick all the boxes. I'm going to wait for those.
You mean
Um,
like Aussie yesterday getting very close to this old high here and then
yeah,
coming off today?
yeah. And
Yeah.
we know now that that's a definitive high, and we couldn't even get up to that high yesterday.
Yeah, missed
Um,
it.
So if we go up there again and we hold it, you've got a clear level to trade.
Right.
You know, you're not going to be trading here at 66, 60, 70, 45. You know, you've got your support below around 66, 30-ish. And you've got that high to play with. So don't, be very strict with your levels. Really go for the ones you think have got the highest chance of winning out on. Yeah, and don't get stuck in a middling trade.
Okay. Anything else catch your attention? I was talking to Blake about USD Max that I wouldn't be short this thing anymore because, I'm not saying the low is in, but it feels like it's trying to build a low.
Yeah,
This recent low was pretty glaring between the prior readings. So
yeah. I was watching that last night over the Fed, and it's the only dollar pair that was holding on its
yeah,
lows. It's holding that 715. And yeah, we've got a little bit of a break underneath it, but you get that in this pair. Um, I think if we go through the 715 now, then it could be
yeah,
off and running again to the downside.
Hey,
Um,
Dale, can you, since you guys are talking about the dollar mex, do you mind pulling up the dollar ZAR, the rand,
yeah. I
and
do
and
have it.
and yeah, you just type it in there, or you have it just a couple pairs below where you were just at. No, just dollar
Yeah,
mex is there. Go back, go, yeah,
there
there,
it
two
is.
more. There it is. Yeah, look at the daily and weekly charts of this one, Ryan, and Dale. And Steve, since you're here too, so and everybody
Yeah,
else that's looking in, look at this. Or go to a weekly chart. this is an emerging market currency that looks like it can, and if you zoom out a little bit, I mean, where if the dollar really wants to take a spill, think about like where the dollar rand may go on that big double top. You see that?
Yeah.
It's very similar to the MEX. It's very
It
similar
it,
to the MEX.
it
Look at
is,
that.
but it's even got more downside in my opinion than the dollar
Yeah,
max. Yeah.
yeah. I
So
mean, if you look
anyway,
at that 1747 level you've got, it's acted pretty much the same as the 1850 in dollar MEX. We came down, it was support for a long time. We had the break and now it's resistance, and now we're looking to break the lows again. So, yeah, they're following a similar pattern. Obviously, we've got to look at the USMCA, which is going to be front and center, particularly in January, if we don't hear anything before. So, yeah, this and the MEX could be moving significantly.
Yeah, the South Africa is not a favorite country of our president.
Nope.
So I mean, just that headwind is something that would make me avoid it. And pre-Trump, there were all kinds of issues. I'd hear from they were disintegrating. I knew traders down there that they never knew when their internet was going to be on, and they were, worried about what's happening on the ground. So I don't know. Yeah, maybe this is going to become the Turkish lira, South African rand. What do you think? Carry trade.
I don't know.
Huh?
I don't know about that. I don't know
All
about
right.
that. No.
Well, how about the U.S. dollar become the Turkish lira?
I think that's a higher possibility there.
That makes me a little nervous.
It should, as it should. I think you listen to like I don't know if you guys caught like Jeffrey Goonlock after he always does his FOMC like
quite a
breakdown
bit, yeah.
on CNBC afterwards. He does his half an hour breakdown, and man, I mean, you want to talk about a dollar bear, but he's been a dollar bear for a long time, and he's great.
Yeah.
He's like, look, I make calls, and I'm my timing's not the best. He's like, I've been saying the dollar's going to get killed for, the last year and a half. And, now it's starting to happen. The thing is I am getting, I mean, you can't really argue the debasement trade. You've seen gold, you've seen silver. Yeah. I mean, I think crypto was a symptom of that, over the last year, or 2 years, but you're really seeing a divergence away from dollars, and not so much in fiat, over the last few months, but the dollar index is starting to break. But the thing that I want to accentuate about yesterday is you have a Fed that basically, and Ryan, I want you to chime in on this, and Steve, you can chime in on this as well. We have a Fed that really is signaling that that inflation is cooling. It's a tariff one-off, right? I just combined those two words to make tariff. A tariff one-off. Inflation should come down. Growth should stay steady, but our jobs market are going to weaken, which, I don't know if I necessarily buy the GDP argument, but that's neither here nor there, because they're shitty at forecasting anyway. And I think, forecasting is a tough biz as it is, but we are having a situation where we have other central banks that are more hawkish, and we are seeing a divergence between that, where we have still an FOMC, at least at this point in time, and what we're going to know at least for the next, probably at least for the next week until we get to the jobs report, and maybe even past that for the remainder of the year, that we have a divergent central bank, where we have the Fed that is looking to cut, where other central banks might actually be looking to hike. That divergence, even if it's just for a week or two, could put the dollar index right here. And if you tack on some weak data, again, jobs report next week. I don't think we're getting our CPI until after. I don't think we're getting it until after the first of the year. Didn't they say that, Ryan? That's what Shy Girl told me.
Yeah, I think PPI. I can't remember about CPI. I'll have to check the latest update. They keep shifting it around every 5 minutes.
They are, yeah.
So I know
So,
PPI will be later. I don't know if we get CPI next week.
yeah,
So are,
and
no, go ahead.
Natchet brings up the good point too. And plus, we're going to have a Fed chair, whether it's Hassett or Warsh or whoever's going to be the Fed governor is going to be more of a yes man than Powell is. So the tilt of the Fed is going to be more dovish. Period. End of story. No matter which way you slice it. I mean, you factor all that in together, it does seem like the dollar is at least vulnerable to trade lower in the near term. And if the data starts to come in crappy, we could actually see the dollar go for a bigger move lower at the beginning of the year. That's just my take. Ryan, do you have any opinions on that?
No, I agree with that. I think you need to look at the scale of it, though. We're not talking about the Feds taking rates all the way back down to zero.
Correct.
So, there may be, let's say, 2-3 cuts. Maybe they get to 3% and decide, that's a comfortable level for now. So 75 basis points of cuts shouldn't be the dollar index trading down at 80,
Right.
that sort of thing. So keep it in scale. But if the market's going to move on what happens in the US, you get 3 negative 300 jobs prints, then the market will obviously get too dovish over it.
I mean, you can just see in the central bank pricing. This is a really just a good visual way of being able to see, this is what the Fed is looking at. But then you go to the ECB, for example, and you go, oh, wait a second, is that a hike? Is that like monetary policy turning up? We already know the BOJ is looking to hike. Bank of England is not so much, but Bank of Canada, look at that. RBA, I mean, it's like, okay, that is polar opposite to what you're seeing here. So, Dale, when you look at that and you go, well, the Fed's, the market's looking at the Fed cutting rates, yet the RBA and RBNZ both, look, here's the RBNZ, same, right? You're looking at hikes further along the curve. Here's the RBA. And you're looking at hikes further along the curve. Like, do you really want to be selling Aussie dollars when you have that divergence between two central banks?
Yes. I think so, because I think as usual, and we've seen it time and time again, the market goes too far. These central banks have just managed to get rates. They spent a year and a half, nearly 2 years, bringing rates down to a neutral level. Okay, and before some of them even got there, the market's saying, "Oh, you're going to be hiking soon." I think it's bonkers. I think it's going to cause a big pushback by a lot of these central banks unless inflation is taking off, unless economies are booming, because there's no justification for it. And I think
I agree with you,
They
Ryan.
could have pushed back yesterday, they didn't. But I think if those expectations grow, because it undoes all the rate cuts if the market's artificially tightening policy for them.
I agree, but you're talking about something that maybe in the next several weeks we might get pushback. I'm talking today. We're day 2 after a Fed, a dovish Fed at that.
Yeah, exactly.
There's room to run. I mean, when you look at these central banks going in opposite directions, there is room to run. That doesn't mean that. Yeah, I agree with what you're saying, but that thought process is probably 2 to 3 weeks, if not the beginning of the year away.
Oh, yeah, probably longer than that. But
so,
you're absolutely right.
With that being said, where could the Aussie be 3 weeks from now if people continue along this path? My opinion is the Aussie could be trading right here. This rising trend line that has capped us since all of 2025. It comes in around 68 cents, which is 200 pips higher than where we're at right now. And there's a 200-week moving average that we are currently clearing. So
I'll throw a quick counter to that, and then obviously, let's hear what Dale has to say. The quick counter to that is that the RBA turned exceptionally hawkish. Okay, almost shockingly hawkish. We could get a hike in February, according to them. We've just had a dovish or an unhawkish Fed compared to market expectations, yet Aussie dollar couldn't break the highs. of the last
That's
week
that's an Oracle
or the
issue.
last day.
That's a stock market came under pressure last night issue.
Shouldn't matter for divergence
But
between the
Aussie's
currencies.
still a risk currency. You can't argue that.
No, no, I'm not.
As
I'm
much
not.
as it shouldn't be, it is.
I'm not saying it can't shoot up to 68 on the back of what you're saying, but it's
Yeah.
had two opportunities to do exactly that, and it hasn't. Maybe the Aussie dollar is not the best one to look at for that situation. But I'm just making the point. It's okay to say something should do something, but you have to then work out what to do if it doesn't do what you expect it to do. Now,
Sure,
yeah, you could
of
say
course.
I'm still a buyer, I'm still a dip buyer, I'm happy because of that information. But then the longer it goes where it's not doing what you want it to, where as a trader, you have to say, hang on, I've got this idea, it ain't working. What do I do next?
Yeah. Okay. Wait. And look, I just want, since Ryan, you weren't here, I wanted to point out something that we were talking about in the chat room. And I want just to point this out. This is a really big deal to me. Over the last couple of days, Ryan has been pointing out that there's a huge amount of euro options expiring at, I mean, that's 8 billion. I'm sorry. It was 6 billion at 116. Another 2.3 billion at 115.80 to 115.90. This right here, Ryan's been posting it every day for the last, couple of days. We've been talking about it. That was, and it expires today. That means the market was extremely, well, they were looking for a hawkish cut. I know Ryan hates that. The market was looking for it. The market was saying, we're going to get paid big time today at 116. They've been buying those options all week long, guys. And that, to me, was the reason why the euro has not stopped. It's like, we got a more dovish
So a lot of people
cut.
were short the 116 calls and had to buy
Right.
the euro to cover their short option position. Is that
Right.
the
So every
implication?
day, guys, you should be looking at the orders and options page. Ryan puts all the big offers and the big bids around, but he also highlights all the big expirations. You can get this information in a couple of different places, but not the way Ryan does it, because he lumps them all together and he goes through painstaking Bloomberg experience every evening. I know it's painstaking, Ryan, because I watch you do it. Painstaking Bloomberg experience every evening to come up with the amounts that you see here, and he highlights them in red to show you how important these big expirations are. So hopefully you guys pay attention to that if you're on Forex Analytics using the product. Ryan, you want to mention anything before we get last minute thoughts here?
Yeah, it's just a shame we're not around 116 with all those options going off, because it might have presented a trading opportunity. So we're well away from them now, so they're not going to have an effect.
Yeah, the trade opportunity is people just continue to scramble to cover up. So,
yeah, true.
that's now you got the momentum trade. So, hey, we didn't hear from Steve. Steve, what are your thoughts on yesterday's FOMC, buddy?
I'm definitely not surprised by the reaction. That is what I expected. I kept saying that technically speaking, the dollar was very nicely positioned for a continuation lower.
Mm-hmm.
So I'm not surprised. I think the market wanted to move in that direction unless the Fed put an obstacle in that, which it clearly didn't, right?
Powell's good at walking the line, man. He's really good walking that tightrope.
Because you're mine, I'll walk the line.
So I think we, in essence, got the green light now for further downside. I don't really see any other way around it at the moment.
Okay, and Dale, look,
I'm not expecting a rainfall type of thing, and I'm not expecting another a demolishment or another destruction of the dollar yet. But I do think that we should be resuming to the downside following what we've seen so far.
Dale, January 10th or January 1st, right here, right? The S&P year to date, as of right now, is up 17%.
Yeah.
If you are an asset manager and you are not keeping up with the indexes, you are scrambling, right?
Yeah.
You need to tack on at least 15, if not 20% right now as an
Yeah.
institutional trader.
Yeah. It could
And
go up to that line.
if you missed all this, you're scrambling, right? Into year end.
Yeah. It could very easily go to that line. Even oils are rallying and crude's doing nothing. But again, I'll just come right back to NVIDIA and I'll come right back to the Mag 7, and they're not acting great. They were the leadership, so they're doing it without them. I'm just not sure if the market could withstand, say, a break in NVIDIA back to 155, which is my target. I think that would at least cause some type of correction in the market.
Yeah, Nvidia definitely is not acting great. But then,
Look
you
at
know,
Uber. Look at Uber. Uber just fell apart in a couple of days. There are, and that was a darling. Okay, Uber was a darling. It's not a tech chip stock, but yeah, there's Broadcom.
but look at
Uh,
Broadcom. This is an
yeah,
alternative to Nvidia. See, this is
yeah.
where people are like, I can get cheaper chips that do the same shit,
All right,
and
let
I'm
me
just.
ask you this: if you close your eyes and you look at that chart and you ask yourself, would you buy this right here?
Oh, I sure as hell wouldn't buy it
Well,
here.
I'm
But
not.
if you're
Yeah,
chasing, I mean, like,
yeah,
if you look at Broadcom and say, well, this is undervalued compared to Nvidia, like,
yeah.
I get the argument about
Yeah, they
Nvidia.
even rotate within sectors now.
Right,
Okay, that's what
exactly.
I mean.
That's that.
So
Yeah, leadership
Uh,
change. You
Blake,
know, yeah.
sorry to interrupt, mate. Just a reminder, we have a meeting now.
Okay, I got to go. I'm going to pass
okay,
it back over to Dale. Hey,
all right.
look, I just want to say, guys, good luck today. Ryan did such a great job on the FOMC yesterday. In the chat room. Thank you so much, Dale. Is always great to get your guidance, and having Joseph Wang here yesterday.
What
That was a
timing, huh? Fed
was a
day, Fed
great,
guy.
great treat. Yes, it was.
Yeah,
And Steve, I'll see
was
you
an
on the meeting.
accident.
And thanks everybody for being with us. And we just had weekly unemployment claims. How'd they come out? I'm sorry. 230,000 expected, 220. So a little weaker than expected.
Bit of a snapback, and Michael raised the point this morning that there's probably a bit of holiday hiring or retail hiring last week. It's
Right.
May, so
Yeah.
maybe a bit of a snapback. But yes,
Maybe I'm a greeter at Macy's this winter, this holiday season. How you doing? You lingerie's over there.
All right, Dale,
Anyway,
have a
all
great interview, and folks, we'll see you tomorrow on the Face Show. But stick around with Dale and his
right.
interview today.
Oh, so we have Broadcom's earnings today. Okay, thank you, Martin. And Pavel, welcome back. How are you?
Hi Dale, thank you for inviting me back. Do you
Okay,
hear me?
I was thinking about you, got you loud and clear, and your patient said that crude would head back down under the mid 50s, and that's what happened. Really never went anywhere, pretty sideways. So is that still on your radar?
Yeah, sure. I think I will share the screen with you. Give me a second. How to do it? Um, do you see it? No.
No, the share button's on the down at the bottom
Yeah, but
green box.
I'm looking forward to confirm it. It doesn't allow me to confirm it.
Let me see if I can share. All right. All right. Now I'll stop the share. Try it now. There we
Yeah,
go.
now it should be.
Okay.
I
You're
will,
up there.
yeah, I will just hide this control panel
You
somehow.
can't, no, you can't come on Face and hide stuff. You
Hide
have
flow.
to, you have to come out of the closet and tell us everything.
Okay. Okay, so let's go. We have the watch list here. And you asked me about the crude oil. So let's open up a chart for crude oil. And yeah, it's been doing basically, it's been going
Nothing.
sideways or lower, doing nothing. I
Yeah.
was talking about the December contract right now, which I can chart here. And I guess the interview was around middle of September. So yeah, it
Yeah.
went down. It went sideways and lower. I was also much more bullish gold compared to crude oil, which was also doing pretty good because when I do a simple ratio between those two, then you could see how gold outperformed the crude oil since middle of September. So that's been also, I think, uh, a perfect call. Uh, my stance toward oil is that the supply demand mismatch in the short term is undeniable. There's a lot of supply, and the only new demand I can think of is that if the Chinese decide to expand their strategic oil reserves and fill them up. The problem is that they will only do so at the price that it's favorable to them. So that's not a really great bull catalyst for oil. So maybe we will go up in the short term because I also mentioned last time I preferred indicator for timing the major bottoms on oil, which was the net traders indicator, and it's once again negative on Brent. We are below zero. We don't have the latest data for WTI, so who knows?
Yeah. Yeah.
But I'm reluctant to be bearish, but I'm also not excited about oil. I think there are better opportunities. And even if I have to pick some commodity, I would pick a commodity that has geopolitical or maybe even we can say political tailwind like soybeans, which is not true for crude oil. It's the other way around because
Okay.
the Trump administration wants to keep prices low, especially before the midterms. So
So we've had a nice little pullback in beans after a nice run. We're well off the lows. Wheat is still the relative weakness. Corn started the whole deal, still looks okay. So how would you approach a spread in beans if you wanted to be taking advantage of potentially higher soybean prices? Do you go to some type of crush spread where you look at the oil and the meal or a seasonal thing? How are you constructing your trade for beans?
yeah, I think there are. Well, you can go into the products, but I would also say there's a higher risk. I think the soybeans is simpler and the best way to take the trade. What I like about soybeans is the upcoming bullish turnaround, seasonal turnaround, around
Post harvest,
yeah, around middle of December. And actually, January is incredibly strong month for soybeans. You can see the statistics and below. And in January, the price of soybeans closed positive in 73% of the time over the past 15 years, which
yeah.
I guess is, I don't know, 11 or yeah, something around 11 or 12 out of 15 years. So that's incredible. And you can also check the last such positive month, which was October, and it worked really well because there was a strong rally on soybeans. So now we are consolidating after the rally, which
Yeah.
is normal. And sometimes in late December, I think there will be a bottom, and then it will be a great starting point for another rally maybe into late February. Who knows? But once again, this is why I like soybeans. The spreads you mentioned, the products, I just checked the not just the products themselves, but also their intra-delivery spreads. And I think the spreads are kind of refusing to move lower while the underlying is still falling, which is a good sign. That's true
Yeah.
for meal and also for soybean
Oil.
oil. And actually,
Yeah.
the oil looks the strongest out of those three at the moment. So maybe soybean oil will be the leader in the next leg higher. Who
Well,
knows?
there's an energy component to that.
Yeah, definitely.
Biofuels made out of
It's
soybean oil.
used in biodiesel production,
Yeah.
so
Yeah.
that could be a tailwind. That could also
Yeah.
be a headwind. Who knows?
See
But
what happens when you and I get together? We build an even stronger case for things.
yes, so
I just bought 1,000,000 bushels of beans.
yeah, that's that's a cool idea. And I will personally I want to go long myself. I'm looking for a bottom, as I said. And here I have the March contract on
Okay.
soybeans. I will stick with the soybeans. I won't go into oil or products simply because yeah, there might be a better potential in products, but also higher risk. And I'm no longer an expert on agriculture. I'm not following the fundamentals.
Can
So
I
I'll
give you, since you're looking for late December, can I propose a time frame?
sure.
Next Friday, uh, I believe it's a solstice,
Uh-huh.
along with a BOJ decision and, sometimes a change of seasons within that window. Markets can reverse direction. So if beans are selling off into that time frame, you could have something. I think there's going to be some nice reversals
Mm-hmm.
everywhere late next week. So we'll see.
Yeah, I'll be watching that. It would be very close to the seasonal bottom, but this is not something that works with a daily precision.
No,
But
no.
yeah, I might go long next
Yeah,
week
you
late.
just want to be in the window.
Yeah, definitely. And this is as I said, this is the chart for the March contract.
Yeah,
I think the price could go somewhat lower. I will be glad if it goes even lower.
yeah,
This is the potential support area I highlighted. There is a gap
yeah,
from late October. So maybe we will fill this gap. Maybe not.
yeah,
Maybe we'll just consolidate towards the upper trend line. Who knows? I
yeah.
think there could be a bounce on the dollar in the very short term. So that would be perfectly aligned with some weakness in commodities. So who
Uh-huh.
knows?
Yeah,
But yeah, I think the soybeans that's a no-brainer for me. I'm looking for these commodities where it's really simple to understand what could drive a potential rally, and here it's perfectly simple. There's smaller soybean production due to the fear of Trump tariffs, and so the farmers planted less soybeans than usual. Many of them favored corn. So that's a potential tailwind. And once again, there's a huge political incentive to
for
get,
China to come in.
yeah,
Yeah,
to get the price higher because once again, midterms are coming next year
yeah.
and farmers are important group,
Great
voters
point.
group,
Yeah,
and especially for Republicans. So Trump will do everything he could to, support the market. There is a deal with China. The question is whether China will honor it and for how long. But as I said, the incentives are here, so that's why I like
yeah.
soybeans.
Chips for beans. That's
Yeah,
a trade, right? We're giving them
exactly.
NVIDIA chips. So, not giving. That
Exactly. Yeah.
doesn't happen. Selling.
Mhm. Yeah, I think that's that would be a pretty smart trade. And by the way, I wanted to talk about also about the commodities in general because I think there might be an important fundamental change, major turnaround in the markets, which is related to commodities. If you remember last time, we were talking about bonds and You told me that you expected the 10 years to bottom around 4%. I told you that I think that I thought that yields would go even lower, and my target was at 4.5 at 30-year Treasury bonds, and that's exactly what happened. The yields dropped, and the 30 years bottom, I guess, somewhere around 4.53, so very close to my target. And now it's heading higher, and I think together with higher yields, we will finally get a rally in commodities. This is the broad commodity index, specifically the Bloomberg Commodity Index or futures on an index. And I have this important trend line. I've been basically watching this whole year, or maybe even before, since 2024. And we have finally broken above this trend line. Actually, someone asked me, I guess it was on Twitter or maybe somewhere else, around middle of November, whether this is it, whether the rally is imminent after the first breakout. And I told the person that I think the breakout was fake due to the price action in rates back then, and that was true. The price dropped below the resistance or support, but now it has broken higher again, and it keeps consolidating above this critical level. So as long as we consolidate above, it is bullish. And the consolidation above our resistance and now support is always a good sign. So
Well, you know where you're wrong on this trade. Back under 108, you get out of the way.
Yeah, precisely. So I think we may consolidate for a bit longer. As I said, that might be coincident with a bounce on the dollar. Maybe we will even drift towards 108. That would be my preferred scenario because that would offer us even a better opportunity, like I said, on soybeans, and it could be perfectly in line with drop into this trading range. So maybe the correction consolidation will continue, but nothing dramatic. I do not want the price to drop below 108. And I think then we might really go up significantly at the start of next year. So that's pretty in line.
Good eye.
Yeah. And I'm also watching another important market. I'm watching iron ore. Iron ore is very important. And while, for example, silver is much more volatile, much more sensitive to speculative flows and so on, copper is a larger market, less sensitive to speculators, which is good. And iron ore is even bigger. So if you need, or if you're looking forward to a big move in commodities, it's really impossible to happen without participation from iron ore. And as you can see, this is the January contract. And by the way, this is the iron ore contract at SGX, traded in Singapore, but it's in dollars per metric ton, I think. So it's the most important worldwide benchmark for iron ore, and the price has been consolidating since the summer. And I think this consolidation will eventually be resolved by a break higher. So I'm looking forward to more consolidation in the coming week or two, preferably towards $100. But then I think we will break higher. I'm also watching not just the price itself, but also the interdelivery spreads on iron ore. And they are also looking good. I will hide the underlying so that you can see just the spreads. And this is also looking like a bullish consolidation. There's no bearish divergence or anything like that. So this market looks poised to break higher, and I think that will be finally the catalyst that will push broad commodities much higher.
Is there backwardation in the spreads, or is it still a carrying charge market?
Yeah, there's a backwardation. I can show you even the term structure curve of iron ore, and
That's bullish.
you can see here. You can also
Yeah,
compare it to long-term averages. So the entire market is in backwardation across the
yeah,
curve.
that's
So yeah,
bullish.
that
Yeah.
looks bullish to me, and
I need it now. I don't care about a year from now. That's
yeah,
backwardation, right?
exactly. Yeah, that's the bullish state of the market. And once again, I focus on the big markets like copper or iron ore, and especially iron ore. Even if I don't trade iron ore myself, or there's no ETF I'm aware of. So even though I cannot trade it itself, I'll still follow it closely because it's very important for not just the rest of metals, but
Yeah.
also for commodities in general. So yeah, and
Nice,
also no,
nice
no,
presentation, buddy. Go ahead.
yeah, thank you, Dale. We shall see how it goes because I've been watching commodities, and I I wanted to be bullish. I think I had a bullish bias, but I was
Yeah,
trying to stay back, stick to the data since maybe late 2023,
yeah.
and that was
2 years.
that was the correct attitude. And even that's also true for oil. I remember back in maybe 2023, 2022, when everyone was bullish,
Yeah.
and I was bearish oil, and I was holding back, and that was also correct. So I have my biases, but I try to not be not
You've
be
learned you could have a bias, but you still need a signal.
yeah, you need a validation
The,
by data.
yeah, you need signals.
You
Uh,
need
a bias is a narrative, it's an opinion. A signal is price, and price is king. That's where people vote. When people vote, people don't lose anything throwing their opinions around. But when they vote with their wallet, that's how you get price.
Yeah,
Okay,
that's
so
well said.
so
So
I really always appreciate you coming here and you get a few light bulbs to go off for me and things that I've been looking at. I think that you're an excellent market thinker, Pavel.
yeah, thanks, Dale. And I'm also watching your stuff because it's a very insightful, and you had a great ride this year. So yeah,
Well,
I'm
don't
looking.
follow me unless you like to hear the ice crack.
uh,
That's what my friend says. Dale, you love to hear the ice crack. I go, well, sure. I was young then and fell through the ice a few times, buddy. But uh, best way for people to get involved with you, Pavel, follow your work, subscription. Why don't you show the public what you have?
Sure, you can go to our website, to our homepage at spreadcharts.com. As you saw, we have our own charting platform with analytics, with signals powered by complex machine learning models or artificial intelligence, as it is fancy to say these days. We also have our own research and many other things. And you can sign up for spread charts on our homepage. You can try it for free with limited data, or you can just go for the full version. And you can also browse through all the features and data we have. So I recommend you to go to our homepage and try it yourself and see for yourself.
Okay. I wanted to ask you something a little off topic. What country are you in again, Pavel?
I'm in Czech Republic, Central
Okay.
Europe.
Let me ask you, for the having feet on the ground there in Czechoslovakia, are people worried about war?
Not so much anymore. People were worried in 2022 when the war broke out
Or
between
yeah,
Russia and Ukraine. Yeah, that was true. but not anymore. I mean, there's a lot of complacency among the
Okay.
people. They don't care about it. Even the attitude towards Ukrainians, because Czech Republic accepted many refugees from Ukraine.
Yeah.
I don't know the precise number, but hundreds of thousands. I mean, we're a small country, like 10 million people, so that's a lot.
Right. That is a lot.
And even the attitude, at the beginning there was a lot of solidarity, and now people are kind of bored with the war, and
Yeah.
they are no longer so eager to support the refugees or the Ukraine itself. Uh,
How about
Previously, yeah,
okay,
sorry.
okay, so that's not an issue anymore. Is it like it is all over the world where people feel squeezed by high prices and that their salaries aren't keeping up with what it costs to live nowadays in your country?
Yeah, this is a huge topic, but I have to
Okay.
say, because if you ask someone in every country, he will tell you, yeah, it's too bad and everything is expensive. But I have traveled a lot, so I can compare and tell you what's true. And the truth is, the living conditions here are much better than elsewhere, especially if for the middle class. I would say it's even better than in the Western Europe, because there's been strong economic growth in Czech Republic and also in Poland, but
Yeah,
Central Europe, Czech Republic, Poland. So
yeah,
the cost of living actually here is not bad. We have excellent healthcare, free education. A free healthcare. You do not pay anything for healthcare here, just a mandatory, service fee or insurance, which is not actually an insurance, and it's very low.
mhm,
And so the cost of living here is not so bad. Yes, in Prague, in the capital, the prices are higher, especially housing has become very expensive, but also the wages have gone up a lot. So it's not as bad as in some other European capitals. And honestly, because I follow the situation in the US very closely, especially with the politics, and I know that the cost of living is a huge topic there. And I think
yeah.
actually you can live much better life here in Czech Republic than in the US for a normal, I don't know, for the majority of people. I'm not talking about the wealthy people or the top 1%
Yeah.
or even top 10%, but for the majority of people, I can honestly say you can have much better life here, because healthcare is free, education is free, childcare is basically cheap, compared to the US. So yes, the prices are going higher, but it's much better here compared to the US.
Okay, well you get that guest house ready for Uncle Dale, okay?
Yeah.
Thanks, buddy, for filling us in and
And by the
adding
way,
a little color.
it's
Go
been
ahead.
not always like that, because I remember the first time I was in the US was in 2004, and it
Yeah,
was much better. I felt much better in the US,
yeah,
We were here, it was still somewhat backwards.
yeah,
And in the US, it was, everything was fancy and people
yeah,
had a lot
yeah.
of money. So not anymore, not anymore.
All right. Well, you know, you are able to recognize the winds of change. So you got short the U.S. and you got long uh, Czech,
Yeah,
your
check
country.
Corona.
Yeah. All right, buddy. Well, I hope the beans break and fill that gap, and you get long, within 1% or 2 of the lows and ride the beans to the teens.
Yeah,
I'm with you on this one. Okay,
yeah,
bro.
I'm definitely going in next
Okay,
week.
Pavel Hala, everyone, and check his workout. He also, applies spreads to him. He's very risk management conscious, which is what you want from people who are giving you ideas. You need to have not just a sword, but a shield for defense.
Yeah,
So thank you,
thanks. Thanks,
buddy.
Dale. Thank you for having me.
Happy holidays, happy New Year. I'll talk to you next year, brother.
Cool. Thank you. Happy holidays to you.
Okay, everyone. All right, Pavel Holla, everyone, at spreadcharts.com on X. And everyone have a great day. And we'll see how these tech earnings, how broad. I would sell a good earnings report, Martin. Buy puts on AFCO, especially if it goes up to what is it, 220 or something. Anyway, don't just count your trades, count your blessings. Have a good one. See everyone for TGIF tomorrow.